Okay, we're going to batten the hatches, lock the door, make sure the generators are on.
Yeah.
The squirrel is turning that little wheel.
Yeah.
Okay, fast as that squirrel can run. We are, look at that. We are here in the quasi blue room. The aqua room, as my wife calls it. She says, it's not blue, it's aqua. It's blue here, but look at it on the internet. It's aqua, the aqua room. We are live, Gilbert Talks Taxes. Those of you that pick us up live, www.WCAB59.com, good morning. Those of you that pick us up later, streaming this, or pick us up on my website, GilbertTalksTaxes.com, good morning, good afternoon, good evening. And those of you all over the country that pick this up and pick up the podcasted version of it, thank you for listening. Good morning, good afternoon, good whatever day it is that you're listening to this. Okay, we are good to go. Look at that. Look at that. You got a brand new screen. Now, you had two screens. Now you just have one. Oh, it's on the other side. I didn't see it. So that Emily, well, Emily's not here today. She couldn't be with us. I know. She will be. I know you were looking forward to having her. My engineer this morning, the ever-cheerful Tom. Good morning, Tom. At least try to live up to your name, Tom. Please, the ever-cheerful Tom. I was listening to you this morning. I got out the Montgomery Ward, 6-band. I was listening to you. You know, you got until you listen to AM on an old-timey radio like that, you're not listening to AM. Exactly. Background crackle, little speaker crackle with the 3-foot antenna that you have to position just right to get the signal. But it's an old 6-band or shortwave. I love it listening to you this morning. It was great listening to the call around, everybody. That was so good. Okay, the program is Gilbert Talks Taxes. I am Gilbert Carmona. I am an enrolled agent. An enrolled agent is a person that is permitted to practice before the Internal Revenue Service and all state taxing authorities. My authority comes from them. It is actually a permitted license that the IRS grants to a select few group of people, and I happen to be one of them. What does that mean? That means that I am supposed to be a tax expert, but I also do financial planning, I do business planning, I do business consultant, but mostly what I do is deal with the IRS all day, all night, all weekend, all the time, 24/7. Now, yesterday, let me get my information. My address, somebody said last week, you didn't give out your information enough. I couldn't get it down. My address is 704 Oak Street in Forest City, right next to Big Dave's Fish Camp, the former Carter Bank building. We have been there now. It's hard to believe. It's going on 2 years. We moved over there, and we absolutely love it. It is our main location, Tom. I still have my office in Tryon, 226 South Trade Street, the beautiful Art Deco building right off the historic downtown Tryon. And one telephone number can get you an appointment at both locations, 828-289-9300. We prepare tax returns. We do tax planning. I also do financial planning. What makes me different, what makes us different in our financial planning is that we're always looking at the tax implication of investments, tax implications of business, because we will continue to be, because it's not changing anytime soon, in an environment where every financial decision is a tax decision. Now, it's been that way. It's kind of always been that way, but it seems like it's more and more because of just the implications. And those of you that have businesses that run across state lines, as many of my clients do, especially where we are here in this part of North Carolina. I've got companies that may have offices, South Carolina, Georgia, Florida, Tennessee. You have different taxing authorities, different tax rates, different tax issues. You know, Florida, Tennessee doesn't even have a state income tax. So there's a lot of these variables. We are in North Carolina, which actually we're not in a super complicated, super high tax state. North Carolina has a flat income tax, 4.9%. We've got relatively low taxes in a lot of things, and it has been an attraction for people from other states that are moving here. As many of you know, you've seen it around the county. We are having people move here from all parts, especially out west, the far west. Dare I say it, Tom? Should I use the C word? California. That is a sinking ship that people are leaving in droves. I've never seen anything like it. And they are in denial of it. They don't think it's happening. They said, "Oh, it's just a few people that are leaving." You can't get a U-Haul out of Los Angeles. And if you can, it's like $1,000. Oh yeah. Oh yeah. Well, you can't get them going out, but you can get them going there. As a matter of fact, they're giving them to you real cheap if you're going there, so you take it there. So they have one for somebody to rent who's leaving. And you have the same story happening in Washington. And then when you see people move there, I've actually seen people move there and then they come back. I've seen several now come back a couple of years later, and they say, "I don't know what I was thinking. I just have no idea what I was thinking." I heard a large, I don't want to say his name because I don't want to, not that there's anything wrong with him. I just don't want to. He's got his own television program. He's got his own podcast. He's got his own thing. So he is a investor. He is an entrepreneur. He does seed money, capital investment money, lots of it. He puts money in businesses. He said he will not invest in Massachusetts, New York, New Jersey, or California. Pretty much anything across the Rust Belt, he's not putting money into. That's Pennsylvania, Ohio, Illinois. He's not doing it. He says the taxes are ridiculous. The rules, the regulations are prohibitive. Elizabeth Warren pretty much said, if you come to Massachusetts and you have a successful business, we are going to tax you at a higher rate. Why would you go there? What's the incentive? I mean, it's always about taxes and legally reducing your tax burden. I've said this I've been on the radio now 10 years, and I've been saying this for 20 years. Nobody has ever walked into my office and said, "You know what, Gilbert? I want to pay more taxes. Gilbert, I don't think I'm paying my fair share. So can you throw another 5% on there? As a matter of fact, let's just put the income. Let's not put any expenses. I want to pay tax on all that income." Said nobody ever. As a matter of fact, the conversation with everybody, 100% of the people that meet with me, is how can we legally reduce our tax burden? And that's the conversation, period. So when we're talking about investments, we talk about tax favored, tax deferred, tax free. There are strategies in the tax code. And as an enrolled agent, that's what I'm always looking for. And I'm always developing these things. So that's what makes us a little different. When we do your business tax returns, we just try to be as accurate as possible and stick to the law. And the law is an ever-moving target. Okay, so yesterday was the deadline, speaking of business returns, was the deadline for the September 15th, was the deadline for corporates. That is you LLCs that file an 1120S tax return. I'm talking slow because I'm getting this weird feedback. What is that I'm hearing over there, Tom?
Delayed.
Well, it is delayed.
Yeah.
It's like I've got a translator. It's like I'm speaking in a foreign country.
That's the way it works.
It's like I'm speaking in a foreign country and I'm waiting for
It's always been that
I'm waiting for the person to, but it's louder than normal.
No.
Did Lou do that? Lou's messing with me. I know she is. I'm very aware of it today.
Okay, you're just hearing it.
I'm hearing it, but I know, I believe you. No, it seems to me you're right. It's always been there.
Yeah.
But now it's, now I can't stop listening to it. Okay. So yesterday was the deadline for 1120S's, 1065s. That's partnerships and S Corp LLCs, S Corp Incs. Actually, any entity that you've created that files an S Corp. So it was yesterday. You had till midnight of last night. I am proud to say that we got everybody done that came to us timely. Of course, there's always that guy. It was really funny because I was talking to some of my CPA friends, and one of them said last night, he said, "There's that guy." I said, "You have him too?" That guy that came on Thursday. And he says, and every year, and it burns Christy up to no end, every year, what's the deadline after we've sent like 7 emails? Because we have the rule of 7, right? 7 emails, 7 texts, that's it. After the 6th one, if you don't get it, that's it, we're done. So we've been sending, since June, we've been sending the emails and the text telling you, this deadline's coming, this deadline's coming, this deadline's coming. And so we had one, but we'll get it done. So what happens if you didn't get your entity tax return filed last night by midnight? Oh, bad things are going to happen to you. Very, very bad things. If you're a partnership, you're going to get a penalty of $185 a month per partner. Per partner. So if I repeat that because if you're a partnership with 10 partners, that's $1,850 a month. Yeah, that you're going to get till you get that tax return filed. And then on top of that, there's other penalties. There's all kinds of, that's just the failure to file penalty. So, but you can still get it in that there is a 30-day window to get them in and just keep it down to a 1-month penalty. So get it done. Now, the next big deadline is October 15th. That is the deadline for individual tax returns. That is your 1040s. All of you individuals that filed an extension, because if you didn't file an extension, you're late as of April 15th. You're done. I mean, you've had penalties going back to that date. But if you've filed an extension, you have till October 15th to get that tax return done. And the reason that the partnerships and the LLCs, S-Corps, are due 1 month before is because we need the document from that partnership and from that S-Corp called a K-1. For every member, every principal in the business, we get a K-1, and that K-1 is what we use to file your personal tax return. So the IRS gave you a 30-day window there to get those K-1s over to your accountant and get your tax return done. Now, most people, not all, but most people that we do their business returns, we also do their personal returns. So with the exception of just a few, most of the partnerships that we do the tax returns for all the partners. There are a few, though, where the partners live in other states. I've got one where 2 of the partners live in other countries. We have a trust. Same thing with trust. If you're a trust, you're the recipient of trust money, you will get a K-1 for that trust, and then you have to file your own tax return. And most of them we do the beneficiaries' tax returns, although there are a few. I've got one trust where 3 of the beneficiaries live in another country. But other than that, that is why you have that 30-day window. So that deadline is up and coming, Tom, October 15th. So we've got those 2. And then the IRS will shut down end of November to get ready for next year. And that's when our real tax planning begins. So let's go ahead and take a real quick break here in 1 minute. Not yet, Tom. Get that finger off that button. I'm not ready yet. I'm just letting you know. Just letting you know I'm getting ready. I'm getting you ready. It's a pre-break announcement when we go into break. Okay, that was a pre-break announcement. Okay, so if you haven't filed your tax returns, your corporate tax returns, if this is the first you're hearing they were due yesterday, please give me a call. We need a meeting. As my granddaughter used to say, we need to have a meeting. We need to have a meeting. We need to discuss this. My telephone number is 828-289-9300. We are accepting new clients, and we are expanding what we're doing. We're expanding what we're doing with tax issue resolution. There are some things I'm going to talk about it when we get back. Let's go ahead and take a real quick break. This is Gilbert Talks Taxes, CAB AM 590, FM 100.9.
A lot of things feel out of control these days. So it's time you pick your battles. Skip playing referee in the morning. Skip laundry this week. Skip game limits today. Skip cooking tonight. New realities require new routines, and it's okay to skip some of the old ones. But don't skip your preteens well visits and recommended and catch-up vaccinations. A public service announcement from Vaccinate Your Family in collaboration with Merck.
If you're like me, 60 and retired, making ends meet, especially here at the supermarket and drugstore, is tough. I'm so blessed to have found benefitscheckup.org. It's a free and confidential website from the National Council on Aging that connected me to $1,200 a year in programs that help pay for food, medicine, utilities, and more. Maybe it can help you. benefitscheckup.org.
We are back. That SOS just goes and goes and goes. We are back. Gilbert Talks Taxes, WCAB AM 590, FM 100.9. The program is Gilbert Talks Taxes. I am Gilbert Carmona. We do tax returns and we do financial planning. My telephone number is 828-289-9300. You can make an appointment if you have a business, if you need your taxes done, if you have a tax issue, if you have investments that you want me to look at, if you have an existing investment portfolio and you're a little concerned about it, because who isn't? Call, make an appointment. I would love to talk to you, discuss what we can do for you, what we can help you with. Tom and I were talking about so many things earlier. Let me bring this back around. Let me get on a very serious. Okay, so I talked about the deadline, talk about the upcoming deadline, the deadline that just happened. Okay, all of you out there, business people that are listening to the program, or if you know a business person, if you've talked to a business person, I talked about it last week briefly. I didn't really get into it, didn't do a big deep dive, but employee retention credit. Some people have called it employer retention credit, but that's not. It's employee retention credit. This is really becoming serious. It's really becoming very serious. So what is it? It goes back to COVID. Government's trying to help businesses, so they came up with this scheme where they're going to give you back part of the FICA withholding for your employees. Okay, they're going to give you back money, the federal government portion that you paid for Social Security from their paycheck for every employee that you retained, hence the name, Employee Retention Credit, that you retained during COVID, during the pandemic. Okay, so it's the second quarter, so what qualifies? Second quarter of 2020, third quarter of 2020, fourth quarter of 2020, first quarter of 2021, second quarter of 2021. Now, if you were a new business startup and you started a business during that, there's an additional credit third, fourth quarter of 2021. But that's only if you qualify for the startup. Now, what happened is there's some pretty strict guidelines about who qualifies for this. You were supposed to have had a substantial business interruption and a reduced business activity, business income over the prior year, which was 2019. Okay, so the idea is you were a business, you stayed open during COVID. I mean, you kept, your employees working. Some of us had to shut down. Those of us that weren't essential workers, or our business wasn't deemed essential, had to shut down. Restaurants, hair salons, gyms, the list goes on and on. A lot of charities, churches, a lot of people, but they kept their staff on payroll. They kept paying payroll. Some didn't. They could only do it for a little while. Some could, some couldn't. Whatever the scenario was. So the government came up with this thing. Congress came up with this thing, and it's very, very flawed. Okay, meaning the law itself had a lot of issues and a lot of problems. So we've been kind of the IRS has kind of been working through it step by step. Well, all of a sudden, all these people jumped on it because the numbers are really big. If you had, I have personally seen, if you had 20 to 25 employees and you're paying them whatever going rate is, and you do this, you apply for this employee retention credit, and you do it by amending your 941 quarterly payroll report. Now, you business people know what I'm talking about. This is the report you file every quarter with the federal government to reconcile the money that you sent them for your employees. You pay your employees, and then you withhold federal taxes, you withhold FICA, your Medicare, and your Social Security withholding, and then you have to file this report every quarter to tell the federal government, okay, I paid, $200,000 in payroll, and I withheld $30,000 in this money, and I already sent you the money because you pay it electronically through EFTPS. But this is just telling them. And then when you reconcile it, sometimes maybe you didn't send them enough money. Maybe you sent them too much money. And so there may be a small reconciliation there. You may be getting a refund, or you may be sending them an extra payment. Most of it's done online. Most of it's done electronically. So typically the 941 is just a paper file. You just send it to them. Okay, so that's the form you have to amend. So what's happening is when you go back and do these 5 quarters, some people are getting back several $100,000. Now, when you got that kind of money, you have fraud on a global scale. And that's what's happening. I have had people come to my office, and these are not clients. These are not people that I did it. They made an appointment. They wanted to talk to me for whatever reason. I got referred to them. And they said, I want to show you this. And they take out and show me a check, because it's not direct deposited. It is a check that the government will write you. The biggest one I saw so far was $789,000. The man shows me that check with the little Statue of Liberty in the corner? He shows me a check for $789,000. I've seen him all over the road, $100,000, $120,000, $200,000. And he's like, I didn't know I was going to get this. And I said as well, this money just didn't show up. What did you do? He said, well, these guys called me on the phone. And they said, I qualify for ERC. It's just forms they'll fill out for me, and I'll pay them a commission after I get my money. I said, well, did they not tell you how much money you were going to get? The one man, and I believe him, because he had this look on his face, and it was a friend of his that said, you better go talk to somebody. You better go talk to an attorney or a CPA or a tax guy. You need to go talk to somebody. And then his wife said, well, we go to Gilbert. You better call Gilbert. It's always the wife. It's always the sensible wife. Yeah. So the guy called and came and he showed it to me. And he's like, what is this? And I told him what it was. I said, and I told him, I don't know that I'd deposit that. You really need to think this over, because when I asked him the questions, he did not qualify. I mean, of all my clients, I only have a handful of people that qualify. So far, I've only done 2. And I've got 3 or 4 that I'm trying to see. We're talking to them. I told them after the October deadline, let's get together and talk. Because this will expire. This is going to expire April 15th of 2024. The 2021 will expire because there's a 3-year window to file these claims. See, this is a normal thing. That what they did is they took a normal situation, because people make mistakes on these 941s all the time. Well, for whatever reason, they make a mistake. There was an employee, there was an error, there was a check that they didn't, and they'll go back and they'll go, oh, we got to fix that. A lot of times we find the mistakes. It's typically people that do their own payroll. They do it, they'll use a product like QuickBooks, or they'll do some kind of a, through Square or something, and they'll make them. It's usually a very honest mistake. It's usually just some, that didn't get processed right, didn't get paid right, whatever. And then, oh, we'll amend it. Oh, you owe another couple of $100. I rarely have had one where it's tens of thousands of dollars. I did have one recently where the man, actually I've got another one that just came, another referral, because his CPA didn't understand the problem, and he called me up and I said, well, this is the problem. And he said, well, how did you know that? I said, well, because this is what I do. And sure enough, that was the problem. Rarely do I see it. I had one that was $9,000 where the payroll processor was withholding and sending money to the government for an employee that he had terminated like a year before. And the payroll processor had it on autopilot. And he's got a big business. He didn't realize that money was coming out. So we're filing a 941 to amend to get him that $9,000 back. It's no big deal. I think he's already gotten part of it back. It's no big deal. It happens a lot. Or it could be the other way around. You didn't realize it and you owe whatever, you pay it and you move on. It's not a big deal. So they've taken this 941 and that's what they're using to make these claims. I don't think Congress, in their wildest imagination, although you don't know, thought this would happen. There are now companies setting up. You can't turn the TV on without seeing commercials for it. It's on the radio, and now they are aggressively calling people. I had a lady yesterday. I told you I've got a handful of people that are possible candidates, so I was talking to the one. She has a business. She was shut down during COVID. I believe she qualifies for 1 or 2 quarters. We're going to see. We're going to talk after October 15th, and we're going to go over it all, and which she's fine with. And she said, Gilbert, what's going on? She said, I am getting 2 or 3 phone calls a day about this. And she says, these are people I don't know. These are people but they act like they know me. I said, well, they're calling anybody that has an LLC or an S Corp or a partnership. They're calling anybody. They're getting your information online. They're pulling it from the Secretary of State's offices. They're buying mailing lists, and they're just calling any number that's on these lists. And it's a major telemarketing push. So this is what is happening now. The IRS is warning people, if you do not qualify, we are going to take the money back. You will owe this money back. If you do not give us the money back, we will use criminal proceedings. So I'm talking very slow and very deliberate because I want people to understand the gravity of this. In my circle of professionals that I deal with, other enrolled agents, accountants, CPAs, tax attorneys, they're already seeing people calling them saying, I got a letter from the IRS about criminal activity. I have no idea what this is about. Because they're signing these forms and either the money's going directly to the scammer. Well, they're not really scammers. They're accounting, they're claiming to be accountants. Or the money's coming to them and then they're paying the 15-20% commission. The guy, by the way, with the $789,000, he paid $115,000 to have somebody fill out some forms that takes me, on average, it's been taking us 5 to 10 hours. 5 to 10. So they charge that guy $15,000 an hour. Nice money if you can get it, huh?
Yeah.
And this is the thing. The IRS is going to come after him for $789,000, and he's going to try to go back for them for that $100,000 to $115,000. Oh, they're already gone.
Yeah.
They're already not answering his phone.
Oh, yeah.
They're already not returning emails. As a matter of fact, the emails are bouncing back. So it's like they don't even have the email address anymore.
They're in Jamaica.
They're in who knows where.
Yeah.
This is global. This is at the level of organized crime.
Oh, yeah.
This is Russia. This is China. This is Africa. This makes the Social Security scam look like just nothing. The people that call you up telling you your Social Security check's being held if we need to verify your bank account and your date of birth and your Social Security number and your address and your mother's maiden name. Yeah. This makes this look. So this is what the IRS did yesterday. This is hot off the press. Actually, they did it Thursday night. We got it. We all got our official notices yesterday morning when we all showed up to work. IRS puts an immediate stop, and I'm reading, so the IRS puts an immediate stop to new ERC claims to protect taxpayers from employee retention credit scams that pose an unacceptable risk to businesses and the tax system. The IRS has halted processing of new ERC claims until at least January of 2024. The agency said the moratorium is necessary due to a surge in questionable claims, the concerns of tax professionals, and the continued aggressive marketing of the credit to ineligible taxpayers. The IRS will continue processing and paying ERC claims prior to the moratorium, but noted that increased scrutiny of the claims will result in longer processing times. Now, I'm going to stop right there. There's a little bit more to this announcement, but I'm going to stop right there. Normally, when you make a 941 claim, just a normal claim, like I told you about the guy that overpaid, he overpaid $9,000, so we're trying to get his $9,000 back. He's already gotten part of it back. When you file a normal 941 claim, it takes 6 months. I mean, it takes them because they look at it. So you actually, this is not a computer thing. It doesn't get scanned into the system and the computer takes over. This is actually eyeballs on paper, where they will look at it, they'll pull it up in the system, and it goes through several layers of approval before they give you the money. And they're talking about longer times. So, I mean, what's longer than 6 months? This could go into a year to 2 years. I don't think this problem, and I've been pretty accurate on a lot of these predictions I make, just because I understand how the system works, because I'm an enrolled agent, Tom. This problem is not going to go away for 2 or 3 years, maybe even longer. We might still be like our children might be talking about this problem. I mean, this is going to be around for a while. Let me keep reading the announcement. The IRS also issued a warning to businesses to be on the lookout for the wildly aggressive marketing of misleading and improper ERC claims targeting ineligible taxpayers. The warning was accompanied by a printable version of its ERC checklist that tax preparers can use to explain eligibility for the credit to their clients. We actually had to come up with our own early on because there was no guidance from the IRS. So we came up with our own kind of checklist. I sat through a 3-hour special training class put on by a tax attorney, big tax attorney, very famous, works with just professionals only. He doesn't work with clients. He's the guy that we take our problems to. That's kind of his role. And he was on top of this early on because he's connected with people in Washington and he knows, he talks to high-level IRS people. So he kind of put something together. So we've been doing this kind of on the fly. But now the IRS is finally giving us more and more guidance, which is why I kept putting these claims off. I kept telling people, look, we have till April of 2024. And none of my businesses are in the position where they got to have that money. I mean, they can wait. There's nobody. I only had one person that went through a rough time through ERC. They were shut down. They were trying to bounce back. They really needed the cash. And they were an obvious case. They were shut down for 6 months. There was no question about it. I did their ERC right away, got that sent off right away, and that one's coming back. I'm not worried about that one. I did another one I'm not worried about. He actually had to cut his payroll. He had to cut his staff down for 2 quarters, almost to nothing. So these are obvious cases. Other ones I said, we need time. We need time to look at it. We need time to review it. And am I glad I did that now, Tom? As I shake these little papers that the IRS is sending out. Let me keep reading. So the National Association of Tax Preparers, a large national association, said, I commend the IRS for its proactive measures, notably the announcement of an ERC eligibility checklist aimed at reducing errors and fraud in the ERC program. The rise in claims, exasperated by misinformation from third-party service promoters, necessitates such actions to safeguard the program's integrity. Given that ERC is a refund of payroll costs, it is important that these funds be distributed responsibly and in compliance with the law. Okay, so all of that to say, if you have filed one of these ERC claims and you're concerned, please, you need to stop and review this. If you haven't gotten the money yet, you're still waiting, make sure, because you are going to receive some level of auditing. It could be from the IRS criminal division. And those are people you don't want to play with. These aren't normal auditors. These are people that are coming in because they've already flagged this with you as fraud. And that's a bad place to be. Normally when an auditor comes, Tom, you got your business, you make widgets, you're part of a regular, what we call a CP audit, you get a letter, they want proof of your income and they want proof of your expenses. Simple. Mundane. I know people panic when they see that letter from the IRS. To us, it's just normal. Okay, let's give them what they want. You give me the thing, we compile it, we get the bank statements together, we get the spreadsheet going, we get lists of your expenses, package it all up real nice. I either fax it if that's what they want, or we mail it to them, or they may want to have a meeting. We'll meet at my office. Don't ever meet the IRS at your office. If you're my client, you're going to meet them at my office. Okay, and you have that right. If they want us to come to their office, I like to use the Greenville office because it's closer to us. It's the best office to meet people. We'll set it up there because you can choose where you're going to meet them. So we meet them, we give it to them. This is what we do. We answer their questions, and then we move on. It's really not a big deal. I know people are like, what do you mean I'm being audited? Yeah, you're being audited. It's hello, welcome to America. Yeah. This is what happens. And we move on with it, and we do it, and we respond, and most of it is just being ready. We've done enough of these. We know what to expect. We know where it's going to go. So we do. This is different. This is criminal. They're already assuming. Oh, so to finish the thought, the auditor with the CP letter and that, they're not assuming you did anything wrong. They're going to look at it. Now, if they see things wrong, like the one client that came to me because she had used her business account to go to Cherokee. I said, I'm sorry, I can't help you with that. It's not a business expense. Yeah, really. Well, unless it's something obvious like that, if it's just going to be a normal thing. The auditor's not assuming you did anything wrong. The auditor wants to see. Now, if they find you did things wrong, then you've got a whole other set of problems. Okay? These people are coming in, you've committed fraud. That's how they're coming into this meeting. And you have to prove to us you didn't. And by the way, ignorance is not an excuse. Because that's what's happening now. Most people, and I'm going to finish this before we take our next break, most people are used to having a relationship with their tax preparer where I'm watching out for you, Tom. I'm watching out for your best interest. When I prepare my tax return, when I prepare my tax return for you, I'm always thinking, I don't want you to get in trouble. So I'm thinking about this, I'm thinking about that. Christy is very, very good because of her construction background. 20 years working for a custom home builder. She knows, with all her builder clients, she knows what looks good on that spreadsheet and what doesn't belong. She knows. And she'll say, this doesn't look right. What is this? And she'll work it through with you because we're always thinking about you. These marketers, these people that are coming to you with this ERC, they don't care about you. They're trying to get this number as inflated as possible to the point that they're even going to make up numbers. So this is what they're seeing. There was a man, one of my CPA friends told me, there was a man that came to him, said, I need help. I got a letter from Charlotte, which is the criminal division, got a letter for the CRC credit, and I'm concerned. And the CPA said, well, what's your concern? He goes, I didn't have any payroll. And the guy says, well, how did you even do this without payroll? You're supposed to have payroll. It's employee retention credit. He goes, I don't know. I got a phone call. They said I qualified for this credit, and they gave me the forms, and I signed them. And then I got this check, and they got 20%, and now the IRS says I owe them this entire amount with penalties and interest, and they're starting criminal proceedings. Because he trusted these people thinking they're like his tax preparer or his accountant that he can trust. I mean, there are people that really trust us. It is a relationship we have with people. It's not a, there are people I have been doing, Christy and I were just talking about this yesterday. There are people that I have been working with for over 20 years. And this is, I've seen children come. I've seen grandchildren come. I've seen dogs come and go. I've seen, we're part of the family. I've been at the funeral. I've been at grandma's funeral with them. And it's a different, and people were thinking they were having this kind of relationship with these people. Well, it's not. These are aggressive marketers. And they're going to disappear once they get your money. So I can't drive this point home enough. If you're in that boat, if you're in that position and you're not a client, well, if you're in that position, you're not a client of mine. So let me say that. If you need help with this, the audit letters are going to start coming. If you've already got some, give me a call. I can at least discuss it with you. I at least want to hear your story. I want to hear what happened to you. Give me a call, 828-289-9300. You can send me an email, gilbert@gilbertcarmona.com. That's gilbert@gilbertcarmona.com. You send me a letter, send me your information. Let me at least review it and let me get back to you. But this ERC thing is going to get very, very serious, very, very fast. It's already gotten serious. But I think you're going to see it escalate over the next couple of months. Because as we come to the deadline, they're getting more and more aggressive. That's the point I wanted to make. Okay, Tom, we are 4 minutes past our break time. Let's take a little quick break here so I can drink a little water. And I'm going to talk about something else that I was right about when I get back, Tom. Gilbert Talks Taxes, WCAB, AM 590, FM 100.9.
Being a teenager is tough. There's the constant pressure to be liked.
Endless worrying about college.
Cyberbullying, high expectations, all the negativity.
There's no question. Being a teenager is tough. And what do North Carolina's teens do when they want to block out the noise and clear their heads?
We play!
Research shows that teenagers who participate in high school sports have lower stress levels, more confidence, and greater self-esteem. And then there's the biggest benefit of all.
High school sports are fun.
Not just fun.
They're a lot of fun.
Encourage your teenagers to participate in a sport or activity when they go to high school. They'll stress less and smile more. And they'll be laying the foundation for a happier, healthier future.
This message presented by the North Carolina High School Athletic Association and the North Carolina Athletic Directors Association.
Hi, I'm Vivica Fox. For more than 100 years, American Humane has been helping our best friends in their worst times, during hurricanes, tornadoes, and increasingly, wildfires. They're real heroes to these animals. But Mother Nature isn't the only danger that animals face. Sometimes it's human nature that's the greatest threat. Each year, more than 6 million beautiful adoptable animals are being abandoned, and more than 1 million are euthanized before they can be rescued. These animals need heroes too. Heroes to open up their hearts and homes and to give them the love they deserve. Be a hero to an animal in need. Consider becoming an American Humane Rescue Volunteer or adopt from your local shelter. Visit AmericanHumane.org to find out how you can be a hero and help our best friends in their worst times.
We are back for this final segment of Gilbert Talks Taxes on this September 16th day, the day after the deadline. and we made it through the deadline. I am Gilbert Carmona. I am an enrolled agent. I am a person permitted to practice before the Internal Revenue Service. Taxation and investments is what we do, and the two really do go hand in hand these days. There's a lot of, I want to talk more after tax season, after the October deadline. I do want to talk some more about tax deferral, tax deferred growth. Want to talk about, there's a lot of funds that are coming out as we're seeing higher tax rates and as we're seeing what's happening with inflation. There are a lot of funds and there's a lot of investments out there that are offering some serious tax deferral, Now, when I talk about tax deferral, because people say, well, I want tax-free, when really what they're meaning is tax deferral. An IRA, a traditional IRA, is an example of tax deferral. You put the money away tax-free right now. It's money that you haven't paid taxes on. So typically the way we do that is your income. So an IRA, you take $7,000 from your IRA, or you take $7,000 from your income and you put it into the IRA. Well, so that money gets reduced from your taxable income on your tax return. So you put that $7,000 away tax-free. You didn't pay tax on it. But when you take that money out, you're going to pay tax on it then. The theory is that you're going to put the money away when you're younger and you're in a higher tax bracket. That's the theory. And then you're going to take the money out when you're in retirement and you're in a lower tax bracket. It's a nice theory, but it really hasn't panned out because you have people that have actually saved a lot of money and now they're still in a higher tax bracket. So that's actually an example of tax deferral. You're deferring the payment till later. A true tax-free retirement plan would be like a Roth, where you put the money away after taxes, so you've paid tax on that money, you put it in there, but when you take the money out, all the gain is tax-free. Okay, so there are some strategies that you can do. Just ask Mr. Thiel, or Thiel, or however you pronounce his last name, Thiel. He actually put stock that he bought in Facebook and PayPal before Facebook and PayPal became big, stock that he bought for like $17,000, and today it's worth $5 billion. And he's going to take it out tax-free. That's what we're talking about here. I love it. It's all legal. It's in the tax code. So that's an extreme example. But for most people, that is a tax-free, truly tax-free. Well, there's other tax-deferred, tax-favored, and tax-free plans that are out there. These are all within code. These are all accessible. This does not involve any offshore entities of questionable natures. If you want to have a conversation with me about investments, you want to have a conversation with me about tax deferral investments, give me a call, 828-289-9300. Let me talk to you about, I'm going to close with this interesting note. You remember, Tom, because you've been my engineer now for a few years.
Yep.
We're going on a few years together.
Yep.
And see, Todd, when Todd's my engineer, and I love Todd, but Todd's always Googling. I really don't get the feeling like you sit there and pay attention. So you probably remember this. Our current president's, what's his name? His fraudulency. When he was campaigning, I'm going to go way back. Let's get in the Wayback Machine here a minute. You remember he said, we're going to hire 87,000 IRS agents, and we're going to arm them, and they're going to go out and they're going to collect tax dollars from the rich people. You remember that?
Yeah.
The 87,000 agents.
Yeah.
Okay. And I came on the radio and I said, that is ridiculous of him to say that. It was preposterous. And it really just showed a lack of responsibility. Well, then the Republicans who never miss an opportunity to lower the bar came back and used that to campaign against the Democrats. And they said they're going to arm 87,000 agents, and they're going to come knocking on your door, and they're going to come showing up at your business with guns, and they're going to take all your money. Remember that? Yeah. And I came on the radio, and I said, that is ridiculous. Stop it. Stop saying that, because it's not true. I always read the Bible scriptures about what is truth. What is this thing we're holding in our right hand? Please read it. In Isaiah. It's in there. Jeremiah too. I mean, it's what our Bible is about. What is truth? I mean, Pontius Pilate said to Jesus' face, "What is truth?" It's the eternal question of humanity. So I was really deeply offended by both of them about this. Offended and disgusted. Because it was just a lie. They're not going to hire 87,000 agents that are going to get guns and come and knock on your door. And I used the example, well, not the example, the reality of it is, and I was just at the IRS forum 2 weeks ago, and I didn't realize how accurate I was about this. So this is what I was right again. The IRS is having 50,000 employees retiring within the next 10 years. Well, that's what I had said on the radio last year. Well, I learned at the IRS forum from Taxpayer Advocate, by the way, our girl, Erin Collins, she told me, because I had this conversation with her. She said, oh no, we think it's 50,000 are going to retire within 5 to 7 years. She said, we thought it would be 10 years, but a lot of these people are taking early retirement. A lot of them are going to private practice. A lot of them are just done. They're not working. The attrition rate is a lot faster than we thought. So they're going to lose at least 50,000 agents in the next 5 to 7 years that are just retiring. And they're having a hiring problem at the IRS. They're not exempt. You know, the military can't get people now. Private practice, private sector is having a hard time hiring qualified people. Anybody knows, I mean, events are being canceled because they don't have workers. We were just at a hotel, a big hotel in Orlando that had an employee shortage, where the IRS forum was. And they were doing the best they could with the staff they had, and they did a good job. I have zero complaints. They did a great job, actually. So, but they're having problems, so they're not having the people hired. And then I said, at the IRS, there's only 4,000 people that carry guns. And that is the criminal division. Those, by the way, excuse me, are the ones that are going to come to get that ERC money back. Yeah, that's them. Excuse me. There's only 4,000 plus, 4,000, I think it's 4,177 was the number of people at the IRS that actually carry a gun. And most of these people, they're not like the police. They don't have a gun on a holster that they're walking around with all the time. Most of them, it's a service weapon that they keep in a briefcase. They're not, normally if they do something at that level where there's a raid or they're going to come on a business and they're going to seize computers and they're going to seize assets and do that, they usually coordinate with local law enforcement. They come with the sheriff, they come with the local police, it's not like, they don't have their own police force that's going to come in black SUVs, okay? People, please turn the TV off. You're watching way too much TV. It doesn't work that way in the real world. And people that have this problem know they're going to have this problem. So they're not going to show up at your house. Okay? And as a matter of fact, TIGDA did a study of government agencies that had accidental discharge of their service weapons. What agency had the highest rate of accidental discharge of their service weapons? Huh? Which one, Tom? The IRS. I'm not worried about them shooting me. I'm worried about them shooting each other. I mean, literally, that is what was happening. So I said all this on the radio. Told the politicians, please stop it. It's just a lie. It's not true. At the IRS forum, everything I said pretty much was correct. And now the IRS just issued a notice. They are not doing any more door knocking audits. They are not going to come to your business unless it involves, again, criminal investigation. And at that point, you got a bigger problem. But they are not going to knock. The days of them coming and knocking on your business door and saying, open up, I want to see all your records. I want to see your bookkeeping. They used to do that. I actually saw it one time. That was back in the 80s. They used to do that. They kind of let up on that. They are not doing in-home, in-business drop-bys. Why? They don't have the staff, and it's too dangerous for them to do this. So the little staff that they have, they're not going to put at risk. So not only was I right about the 50,000 and the 87,000 and the weapons and all that, now they're not even going to come to your house. They're not even going to come to your business. They're going to do it all. They've chosen to do it all through mail. Now, if they have an audit, that's different. So they send you a letter. We're going to schedule an audit. But it's a plan. It's not a surprise. They're not just going to show up, knock on your door with their service weapon in their hand and tell you to get up against, throw you up against the wall and ask you where your checkbook is. They're not going to do that. Sometimes it just feels good to be right, Tom. It just feels good to be right. Okay, we've got 1 minute left of Gilbert Talks Taxes. So I will be back next week. We are ramping up for the October 15th deadline. If you haven't filed your tax return, you need to give me a phone call, 828-289-9300. If you haven't filed your business tax return that was due yesterday, you really better give me a phone call, 828-289-9300. Actually, don't even give me a phone call. Just be waiting for me at my door Monday morning at 9 a.m. at 704 Oak Street in Forest City. Just be standing there, okay, with a Bi-Lo bag. Well, Bi-Lo's closed. Who is it now? A Lowe's bag, an Ingles bag, a Walmart bag, full of receipts and papers, or like the guy that showed up with his filing cabinet drawer. He just took the whole drawer out of the filing cabinet. Yeah, I gave him the award that year. Listen, it's been really nice to be here this morning. Thank you so much, Tom. I will be back next week. This is Gilbert Talks Taxes, WCAB AM 590, FM 100.9.